Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Helt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Adam Bergman, and he is the founder of IRA Financial Group. Welcome.
Thanks so much, Gary, for having me.
Sure. So, Adam, what made you decide to go from being a tax attorney to leading this company that is a leader in self-directed IRAs?
Well, it's actually an interesting story. It's kind of just but a bunch of luck. So I was a tax lawyer in New York City. I worked at some of the largest law firms in the world, and I was an 8th-year associate. And I was tasked to help a hedge fund client, a pretty big hedge fund client that wanted to use his IRA to invest in his hedge fund. And the partner I was working with said, "Hey, Adam, why don't you research this?" And this was around 2008. So we actually had a library in our law firm, believe it or not. And I started doing some research, and I was blown away. I had no idea that you can use an IRA to do alternative assets. I, as a tax lawyer, think I'm a pretty educated guy. I have a law degree. I have a master's in taxation, worked at some of the biggest law firms in the world. And I honestly thought that you had to buy stocks and mutual funds, ETFs with your IRA or 401k. I did not know the tax code allowed you to do alternative assets like real estate or gold with your IRA. So it blew me away. I basically quit my job months after. It took me about a year to start IRA Financial. And, fast forward about 15 years, we have 26,000 accounts. We're $4 billion in assets. And, it's basically just helping people, educating people about the power of the U.S. retirement system. Then, hey, yes, you can take control of your future by investing in almost anything you want.
You said that with this, that you can invest in real estate. What are some of the other things that somebody can invest in inside their self-directed IRA?
So it's a great question. So IRAs, just to back up, IRAs were created in 1974, just like 401ks. And the tax code did not distinguish between an IRA that invested in stocks and an IRA that invested in real estate. And what it does is it doesn't say what you can invest in. The tax code only says what you cannot. And only 2 sections of the code address these issues. And believe it or not, there's only 3 things you cannot do with an IRA. That's it. And here they are. You can't buy collectibles like art. Not a big deal. You can't buy life insurance, although you could with a 401k. And here's the biggie. Under 4975, in sum, you cannot do anything with your IRA that in any way, directly or indirectly, personally benefits you, your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities controlled 50% or more by such person. So, for example, Gary, you can't buy a house and live in it. You can't take your IRA and buy yourself a watch. Can't take your IRA and buy yourself a truck. Can't take your family to Hawaii on your IRA. Whatever your IRA does, exclusively 100%, it must benefit the IRA. So you can buy real estate and lease it, rent it out to a brother, sister, which is not disqualified. An aunt, uncle, cousin, friend, third party. You could fix and flip real estate. You can buy gold, Bitcoin, private equity, venture capital, private stock, real estate funds, hard money loans. Tax liens. Other than those 3 categories, you can do it.
Interesting. Can someone take and invest their IRA money in their own business?
So great question. So here are the rules. There's three categories of potential structures that could work. So the first, I just said, a self-directed IRA. You could use an IRA to invest in your business, but it would have to be a business you own less than 50%. And when I say you own it, you attribute all family members. So if it's me and my wife, and we're 50-50, that's 100%. My IRA cannot invest in that business, right? Because the prohibited transaction rules I just mentioned under 4975 do not allow me to do that. But if I own 41% or 28%, no problem. So that's the first. The second, if I need less than potentially $50,000, then yes, I could use a retirement account as a way to fund the business. How? Something called a 401k loan option. So you can do it if you have a 401k at work, or if you're self-employed, you can set up what's called a solo 401k. It's your own mini little 401k. And under 4975 D1, an exception to the prohibited transaction rules allows you to borrow the lesser of $50,000 or 50% of your account value. And then you can use that money for any purpose. So let's say you had 75K, you work at Tesla, okay? And you're like, I need 30K to start a business. You can borrow it from the Tesla 401k. You can then take the money tax-free, penalty-free, start the business. And the good news is then you have to pay the loan back over 5 years, but you're paying the plan back, right? You're not paying the credit card company or Bank of America. So that's a great way of doing it if you need, less than 50K. And here's the third way, the broadest and the most powerful and least understood is something called the ROBS, Rollover Business Startup Solution. And the ROBS takes an advantage of an exception in the tax code to the prohibited transaction rules I mentioned before, all the stuff you can't do. Well, that's under 4975C as in Charlie. The good news is if you can satisfy an exception under 4975D as in David, then all those C prohibited transaction rules go away. So there's actually an exception under 4975D13 that allows a 401k to buy what's called qualified employer securities or corporate stock. So here's an example, Gary. So I want to start a plumbing business. Okay. So instead of an LLC, I set up a C Corp. Okay. I call it, ABC Inc. And now let's say I have $100,000 from a former employer and it's in an IRA now at Vanguard. And I'm like, I'd love to use it to start my plumbing business. But if I pulled it out, I'd have to pay tax. And since I'm under 59.5, also a 10% penalty, which is not very tax efficient. So this ROB solution will allow me to have this C Corp, ABC Inc. ABC Inc. adopts a 401k, creates a 401k. We call it ABC 401k. I roll over the 100K. I send the 100K tax-free from Vanguard to my new 401k. And then 4975D13 allows the 401k to buy the corporate stock at fair market value, which is basically whatever it's worth now, it's probably zero. So 100 grand, let's say, buys 100% of the company or 99% of the company or whatever percentage you want. If you want to have some personal ownership, that also works. And then the money moves from the 401k to the corp tax-free. The 401k owns a chunk of the business. You run the business like you would any other for-profit business. Since the structure falls under D, you're out of the prohibited transaction rules under C. And now you found a way to put in 100 grand tax-free, penalty-free from your retirement account to start a business that you control. You're the president, you are the employee, you can hire employees. And the good news is not only you get the tax-free, penalty-free use of the money, but let's say someone comes 10 years to buy the stock of the business and the 401k owns 80% of the company, tax-free, right? The beauty of an IRA or 401k is when you transact in the retirement account, there's no tax. There's no ordinary income, no short-term capital gains, no long-term capital gains. It's tax-free. You buy Bitcoin at $3,000, you sell it at 100,000, tax-free. In an IRA or 401k, you buy real estate at 100K, sell it for 20 million, tax-free, penalty-free. So you get the advantage of using the money tax-free, penalty-free, and then you have the ability to earn a salary, run your business, and then on the exit, you also have the potential to sell the stock tax-free, and also any dividends from the corporation. If you have retained earnings, right? Money after you paid your tax, your retained earnings, you can dividend back to the 401k tax-free too to make other investments. So it's a really great strategy. And that's the ultimate. If you want to use more than 50K, you're going to own more than 50% of the business. The ROBS, the Rollover Business Startup Solution, is the ultimate solution.
I mean, it's one of those things that almost sounds too good to be true. What are some of the what are some of the major mistakes that you're seeing people make when they get into this and they try to do this?
Okay, so definitely, I wrote a book on this. It's not super complicated, but you need to work with tax professionals to understand this stuff. Why? Because you have a 401k, so you have to make sure you're offering benefits to your employees. There's a valuation question. You need to make sure that the 401k is paying fair value for the corporation. And you have to understand how the rules work, right? You can't use an LLC. You can't use an S Corp. So this is especially true, Gary, if you have an existing business, right? Let's say it's an LLC or an S Corp, And now you want to do this ROBS because you need money to expand your business and you want to tap into your retirement account tax-free, penalty-free. You want to make sure you understand the rules, because if you don't, you can get into some hot water by creating a tax issue that you're just not aware of.
When business owners try to do this, do you see them? I mean, because everybody talks about, hey, you want to leverage your money and everything else. Do you see that people can easily, get over leveraged on this?
No, because the good news is with this is a lot of folks that are doing this, and I've done, thousands of these over the years. Most people are small business owners and they want to use cash. So they will potentially also do like an SBA loan, but they want to use their retirement account as a down payment for the business, or at least a significant capital source. So they're definitely using less leverage in this case because they're using their retirement account as equity into the business. So the only risk to them is, listen, we all know that it's hard to run a business, right? 50% of businesses fail within the first few years. So the risk and the most important thing to ponder before you do this is the following. Hey, there's a chance my business fails. So, hey, I'm going to be taking my hard-earned retirement money that I saved the last 5, 10, 15, 20 years, and I'm going to invest in this business. And I'm hoping it works. I want to invest in myself, but you have to be realistic and understand there's a chance it fails. So to me, that's the most important thing to consider is, hey, I'm taking, my nest egg and I'm going to invest it to basically invest in myself. How comfortable am I with this opportunity?
You talked about it just a minute ago, and I think that this is something that's really good. Everybody always thinks about their exit strategy. And if you're using the self-directed IRA to get your business started, and you're saying, hey, when you sell it, it's just going back in there. So there is no taxes being paid upon the sale. Many people don't always understand the rules of C corporations and the fact that they kind of stand alone, pay their own taxes and everything. And business owners tend to pay personal expenses. How can, if someone pays their personal expenses or takes money out of a C corp without it being run through a W-2, can that adversely affect this plan that you've created with having the IRA be the owner of the business?
So, right, once the ROB solution is employed and the money moves from the 401k to the C corp, and then the C corp now uses that money to buy inventory or hire people or whatever it does to operate the business is run like a profit business, just like any other business in America uses a corporation. So yes, it's important anytime you have a business that you understand that business expenses should be paid by the business and personal expenses should be paid with personal dollars. So obviously there's a fine line between that in some cases, right? Travel or entertainment, but obviously you want to be careful. But the most important thing to understand for a C corporation is the following. A C corporation has limited liability protection, which is great, meaning your assets outside of the corporation are protected from creditors or bankruptcy. The other thing is taxation. So a C corporation has two levels of tax, right? There's a corporate level, which is 21%, and then there's the shareholder level, which is subject to your individual tax rate. The nice thing in the ROBS is the 401k does not pay tax. So there's actually only one level of tax, right? There's that 21%. And then after, let's say the company makes $100 profit, right? Net profit, right? It makes $200 gross and it has $100 of expenses and it pays tax on $100. So then 21% of $100 goes to the IRS. So it's left with $79. So the company can reinvest the $79. That's retained earnings, but it can also send that money back to its shareholders pro rata. And pro rata just means based off percentage ownership. So let's say the 401k owned 80%. 80% of the $79 can go tax-free back to the 401k to reinvest and buy stocks or other things because 401ks do not pay tax. Whereas the 20%, if it went to the individual, and let's say the individual paid 30% tax, that percentage would be subject to the 30% tax rate. The beauty of the ROBS is, as I mentioned, you get tax-free penalty for use of that rollover money to invest in the business. And from an exit strategy and also from a operational distribution standpoint, when the money is being distributed, if you have excess cash in the business, it's tax efficient to send a dividend from the corporation to the 401k that would not be subject to taxation.
Is there any special filings or anything someone would have to do if they went this route?
Yeah, so great question. So every 401k that has employees has to file a 5500, which is an annual information return. We do it. Like that's what IRA Financial does. We don't just set it up. We'll file the 5500. The company also has to file an 1120 tax return, right? Just like any other corporation. And then obviously you have employees, there's W-2s and stuff like that. But the big thing is the 5500. It's not a tax return, meaning the 401k doesn't have to pay tax, but it's an information return. Just like an IRA has to file a 5498, which the IRA custodian, whether it's Schwab or IRA Financial, we would do. In this case, instead of the custodian, instead of Schwab or IRA Financial filing the 5500, the actual business has to file it. And that's why they would hire a TPA, a third-party administrator, like an IRA Financial in this case, to actually do the work and file the 5500 with the IRS.
Adam, I mean, you've written what, 9, 10 books now on
Yeah, I'm on my
retirement?
10.
Yeah. Could you tell, what inspired you to write all these books?
My story, just because it is so frustrating that, listen, I went to a good university, I went to law school, I did an extra master's, I worked at big law firms, and no one ever taught me this stuff. Like I found this world by fluke. And it's crazy. Why? Because the US retirement system, believe it or not, we're politically left, right, Democrat, Republican, independent, libertarian, it doesn't matter. Everyone can agree the US retirement system is rigged in our favor. Why? It's based off compounded returns. The eighth wonder of the world, Albert Einstein said it. If you look in Washington, the only time you see really bipartisan support is retirement planning, whether it's the Ways and Means, the Senate Finance Committee, the Secure Act 1.0, 2.0, the biggest retirement legislation in the last 7 years. It's almost unanimous, like literally 99-1. Why? Because it works. So the frustration is Americans aren't taught this stuff, okay? There's so much, and forget about business owners. No one's taught this stuff. And this is how smart people get rich, right? Because you want to save in a retirement account. If you have a business, you have an amazing advantage that you can set up a 401k. And instead of being able to put away $7,000 or $8,000, you could potentially put away 25, 35. And if you have the right business, maybe $300,000 in a combo cash balance plan. So there's all these amazing opportunities if you're a business owner to put away money and have your money grow without tax-free and generate real tax-free wealth for you and your family. And it's not taught. It's not explained. So the lucky smart ones learn quick and learn early and they get rich. And then everyone gets left behind. So my goal is, hey, if I can make an impact daily and just help a few people, that's why I love doing these podcasts. If one person, listens or watches this and says, I'm going to open an IRA, I'm going to put up money in it, and I'm just going to be consistent, and I'm going to just do this, whether you buy stocks or real estate, crypto, I don't care. Just save, be consistent, and trust the process. And you will have tax-free wealth when you're older, an enormous amount of wealth based off the power of compounding returns.
Yeah, I think that lots of times people forget about that. And I think especially if we can get to our clients' kids for when they're first starting out, it really makes it more powerful because they're not having to put as much away as it is if they wait until their 40s or 50s to start saving for retirement.
Well, that's 100% right.
Yeah.
Exactly. If I may,
Sure.
let me just give you an example, just to show you the power of compounding returns. And I'm just going to do this while I'm talking to you. So, and just to show you your point, exactly. Let's say you're 24 years old and you say, you know what, I just started my job. I can't put away that much money, but I'm going to put away $2,000 a year. Okay. And I'm going to do that from 24 till 72 years old. And I'm going to average an 8.5% rate of return over those years, which isn't aggressive because if you look at the S&P 500 over the last 100 years, it's averaged over 10%. So if you did that 24 to 72, just $2,000 a year, okay, and that's all you did, you never increased it, you'd have almost $1.15 million tax-free at 72. But instead of 24, if I started at 34, okay, I would only have Instead of 1.1, 498. Okay. So it just shows you the earlier you start is the most important. It's actually sometimes more important than how much you put in.
If you were able to go back and talk to your 22-year-old self, what would you have told yourself?
I was lucky. My dad was a super smart guy. He was a savvy business guy. And he told me, whatever, I was living in New York City. He's like, you're going to blow money. You're going to go out and party. Whatever, just max out your 401k every year. If that's all you're going to do, just max your 401k every year. So I've been doing that since 25 years old, maxing my 401k out every year, even if I don't save outside of my 401k. So I have an enormous amount of wealth in my 401k. I'm only 40 in my late 40s. And I haven't been like that savvy of an investor. I've got lucky with Bitcoin and some other stuff in my IRA, but I have like large 7-figure retirement account just because I listened to my dad. But I was lucky. My dad was a brilliant guy. Not everyone's as lucky as me.
Last question for you. How difficult is it for somebody to get started in a self-directed IRA?
Oh, it's super easy. You're literally, for less than $500 flat a year, you can set up a self-directed IRA. Takes literally a few hours, a few minutes to do, I should say. The whole process would take hours over a bunch of weeks. But you open an account, it's like opening one at Schwab, your personal info, social. We pull the money from your IRA tax-free or your 401k. Once the money hits, you're notified, and then you literally tell us where to invest, whether it's investing in your friend's business or buying Bitcoin or gold or real estate. You have total control. We simply follow your instructions, and then we do all the administration, all the IRS reporting, and you can sit back, relax, and watch your investments grow.
What if I not asked you wish I had, Adam?
So, sorry?
I said, what do you wish I would have asked you that I didn't?
Yeah. I mean, I think I do a lot of podcasts. The questions I get, I think that are helpful are the other pitfalls. Like what are some of the pitfalls that you should consider if you're doing this? So I think these are the three ones. Number one, do your diligence. Like know what you're comfortable with. If you feel comfortable only buying stocks, and that's fine. You don't have to do real estate. But if you feel comfortable in real estate and you want to diversify, know that option's there. And then the other two things to consider is just work with the right company that can help you navigate, for example, the prohibited transaction rules. You don't want to get in trouble and do something illegal. And then thirdly, just understand tax ramifications and being able to structure things on the outset. It's much easier to work with the right team like IRA Financial that can help you structure a transaction in the beginning versus because this happens all the time when people call us and said, oh, I used some other company and now I realize I watched one of your videos, Adam, and or listening to one of the podcasts, and I think I did something wrong. I shouldn't have done this. What do I do? And then it's way harder to unwind something. Whereas if they just called us, we would have said, hey, you need to do this and not that. And they would have been set and on a tax efficient plan. So those are really the three things to kind of consider before doing this.
So Adam, if people want to learn more about you and more about your business, where can they learn more? Where can they, you said that you're on other podcasts and have some educational stuff. Where can they find all of this?
Right. So I think YouTube, we have a great channel, IRA Financial. There's thousands of videos on all kinds of interesting topics on self-directed retirement accounts, 401ks. You can learn about it and like peruse at your leisure. Our website, irafinancialgroup.com, tons of great blogs and info. And if you want to learn more about how to set up an account, it's super, super easy. You can always call us. I mean, we actually have a team of 100 plus amazing tax professionals that will answer your questions for free, right? We just want to help people and educate people on what is possible. So if you want to do it, you can do it in a very tax efficient way.
Great. Hey, Adam, I really appreciate your time today. I think that everybody learned a lot and definitely look forward to conversations in the future.
No, it was a pleasure, Gary. So nice. Thanks for having me.
Great. And this week, our guest was Adam Bergman, and he is the founder of IRA Financial Group. And I'll see you guys next week.